Bloomberg Audio Studios. Podcasts, radio, news.
Welcome to the Bloomberg Daybreak Asia podcast. I'm Doug Prisner. Markets in the Asia Pacific will be playing off a mixed day for U.S. equities. Of the 11 industry groups within the S&P 500, only one was positive, information tech, and that was due to news on Nvidia and Advanced Micro Devices resuming some chip sales to China. We'll take a closer look at that story when we catch up with Ray Wang at the Futurum Group. But we begin with market action in the States. Joining me now is Chuck Cumello. He is president and CEO at Essex Financial Services. He's on the line from Essex, Connecticut. Chuck, thank you so much for taking time to chat with me. I'm curious as to what you're hearing from clients these days in the current environment.
Sure, Doug. Well, thank you so much for having me. Yeah, I mean, we've just gone through a heck of 3 months and change, all the way from Liberation Day and a 20% sell-off in the market to where we are now, where Monday marked the 65th trading day from the low in April, and the S&P 500 is up 26%. So, clients were a little bit whipsawed, but I would say by and large, they stayed the course, and we did a lot of work, a lot of hand holding, trying to explain things. And, we made sure people tried to focus on the long term, but people are generally, in a good place right now, certainly with the positive moves in the market since April, obviously. But, this has been the most, I'm trying to get the right word, the most extreme views based on someone's politics in terms of the market. People's politics always tend to drive what they think, but it's never been more extreme than we're seeing it right now, which I guess is a reflection of the country writ large. But generally, though, people are doing well, stayed the course, and we're seeing people up, Doug, just to expect more volatility. It's going to be a bumpy ride. But there's a lot of challenges ahead, and there's also some good things ahead. So we will see. So
we had this reading on consumer inflation this morning for the month of June. Relatively tame reading, but I think the street is still worried about the potential inflationary impacts of the tariffs. Is that something that you share right now when you look at the tariff story?
Yeah, I think everybody's concerned about that because anecdotally, right? I mean, a tariff is a tax. It obviously is inflationary. However, the more time that goes by since April, when these very high tariffs were initially rolled out and then rolled back, companies have proven to be very nimble and sort of getting their heads around how best to handle this. But inflation is one of the worst things that can happen in an economy. It also drives so many things regarding interest rates and the bigger picture that higher rates versus lower rates have. And then throw in rates with President Trump and Jerome Powell and all the noise that comes with that, and it just continues to cause uncertainty. Personally, I don't think we see inflation skyrocketing by any stretch. I think even this past monthly number, you had some things that were more tariff sensitive, such as apparel rise, but you had that offset by reductions in car prices and in airlines. So I think we're just sort of going to bounce around here in this range. But the bottom line, it was up. I don't think anybody was surprised by that. It was in line with expectations. But listen, higher inflation is a headwind in just about every area. But, companies, the economy have been extremely healthy, extremely resilient. And we're optimistic that at the end of the day, tariffs don't really help anybody. I think we'll get hopefully to a more normalized place, and then we can continue to try to grow this market and grow this economy.
So markets seem to be pricing in somewhat lower odds of more than one rate cut this year. How do you see the Fed proceeding between now and year's end?
Yeah, listen, they, especially with this most recent inflation report, I mean, they have certainly every reason to wait. There's no clear direction in terms of what, listen, we're going to get PPI tomorrow, which will be interesting. But there's certainly no hard evidence or proof that we're through this and that, the Fed can say, okay, great, all clear, we'll start cutting rates. They don't want to make the same mistake, right? They made the big transitory mistake coming out of COVID. They absolutely don't want to make the mistake of cutting rates, and then all of a sudden inflation just jumps and they got to then raise rates. That's the absolute nightmare scenario. But at the same time, they can't just cut rates for the sake of cutting rates. I mean, you got to be careful what you ask for. Last year, the Fed cut rates 100 basis points, right? September, November, and December. and the 10-year Treasury went from 3.6% to 4.8%. So if the market doesn't agree that the move is the right move, it's gonna reject it. And I think that's a big risk out there in terms of the bond market, which again I think was one of the big reasons why President Trump rolled back the tariffs that he rolled out in the beginning of April.
So we had some bank earnings this morning, kind of a mixed bag. JPMorgan Chase with a surprise gain in investment banking income. And if you look at what Citigroup had to say, revenue from fixed income trading was pretty robust. Wells Fargo, on the other hand, cut its guidance for net interest income. How are you feeling about the financials broadly?
I think broadly we feel really good about them. This type of environment generally bodes well for them. I think your phrase "mixed bag" sums it up perfectly, right? J.P. Morgan's report was actually pretty good. They dropped a little bit today. Citi's been such a challenging mess for so many years. The stock buyback they announced as well was a big thing. And I think the news with JP Morgan in terms of about the better results coming out of investment banking hopefully bodes well for the overall market in terms of more deals and things being done, especially maybe with the hope of some deregulation coming down the pike. So overall, we're bullish on financials, but as in any sector, you're going to have some that outperform and you're going to have some that trip all over themselves. But overall, financials should have done well this year and hopefully will continue to do so.
We had a lot of positivity when it came to tech today. The big news was Nvidia and AMD saying that they're going to be able to resume some chip sales to China. This is obviously all a part of the AI theme. And at the same time today, we had President Trump in Pennsylvania talking about a big project for AI and also energy development that would be used to power those data centers. This is obviously a trade that's still getting a lot of attention. I'm curious, Chuck, as to how you're playing it.
Yeah, boy, it sure is getting some attention, right? You think about where Nvidia was, beginning of April there, traded, well, below $100, and it's at 170 and 170. I think it closed that today. I've mentioned to you before, I think you don't own tech at your own peril. I think it is an unbelievable time in the country and in the world's history in terms of whatever is about to come with AI, the level and the impact it'll probably have on everybody's lives over the next 10, 15 years. We were having a discussion about, you never thought about all the things that would change in your life and to make things easier and better. And certainly there are some challenges, when the iPhone came out and the internet launched, right? Thinking about Google Maps or, DoorDash or pick any app you choose of how that's impacted every single person's life. We seem to be on the cusp of that. And so I think you're going to have volatility. I think that volatility is an opportunity to buy. But these cutting edge leading, American companies, I think it's something you certainly want to own.
Do you think we're closer to some type of resolution when it comes to these various trade deals? And we had an announcement today from President Trump on a trade deal with Indonesia. Obviously, China, when you look at Asia, is the big wild card here. But I'm wondering whether we're beginning to get a little bit of relief in markets.
Yeah, boy, I wish I knew the answer for that one for sure. I think the safest thing to say is we're closer to some sort of conclusion than we were before. And who knows in terms of this agreement with Nvidia being allowed to sell these chips to China, if that's part of a bigger picture, tied into getting these rare earths out of China. The way that we view it is it's gotten better. Now, you and I both know it could change on a dime with a tweet or whatever it might be. But I think the reason that the market has run so much and the reason there is this more optimistic feeling is that we saw the worst. I think back at the beginning of April, I don't think we ever go back to that. And I think it's also in no one's best interest to have these tariffs that are debilitating to everybody. So hopefully, there are negotiations that occur to get us to a better place and wrap this up. But it certainly seems like, and I think the news flow and some of the things that have come out of this that do prove that out, that we're getting closer to it. And then we can get to a better place so that at least this part of the volatility in the market tamps down and you don't have to be on the edge of your seat every day waiting for some sort of press release or tweet or something on Truth Social.
Are you still primarily focused on looking for opportunity in the U.S., or are you more curious about things offshore these days?
No, we've always had a sleeve of client assets that we look to invest outside the U.S. I think the average U.S. investor has always historically been underweight non-U.S. investments, and quite candidly, performance-wise, for good reason. But look, if you look at the MSCI EFA index over the past 3 years, it's outperformed the Dow, it's outperformed the Russell 2000. And it's still trailing, obviously, NASDAQ and the S&P, but it's come back very strong. But no, we constantly do look there, whether it's through mutual funds with great managers or ETFs to play the non-U.S. side of things, and that also includes emerging markets, but to a smaller percentage for the average client.
What about the U.S. Bond market or U.S. Treasuries?
Yeah, listen, Treasury bills are a great place to hide out. I mean, we've done a ton of them. I mean, that's the $1 million question: what happens with rates? And I think there certainly is some concern there that, depending upon what happens with, hopefully there's not, we don't all of a sudden wake up and President Trump's fired Chair Powell. But no, Treasuries, for foreign change on Treasury bills are a great place for clients to hide out. We had a great municipal manager in the office today talking to us about the municipal market. We think there's a lot of opportunities there in the intermediate range of maturities. So no, we think it is the right opportunity. But I think equities obviously longer term give you more volatility, but a greater return. But for somebody that's a little bit more conservative or looking for a hedge, I think fixed income now with these rates and with these coupons in this rate environment do give you much more cushion than you got years ago.
Chuck, we'll leave it there. It's always a pleasure. Thank you so very much. Chuck Cumello there. He is president, also the CEO at Essex Financial Services, on the line from Essex, Connecticut, here on the Daybreak Asia podcast. Welcome back to the Daybreak Asia podcast. I'm Doug Krisner. Nvidia and Advanced Micro Devices are planning to resume sales of some AI chips in China. These companies say they've been given assurances from the Trump administration that such shipments will be approved. The key issue here is the necessary licenses. And in the case of Nvidia, it's the H20 Artificial Intelligence Accelerator. This move, by the way, could add billions of dollars to Nvidia's revenue this year. For a closer look, we heard from Ray Wang. He is research director at the Futurum Group. Ray spoke earlier with Bloomberg's Heidi Stroud-Watts and Paul Allen.
Ray, thanks so much for joining us. I just wonder if you can explain for us what you see as being the impact on Nvidia's bottom line, considering this reversal. I mean, previously it was selling about $15 billion worth of chips to China. Can those sorts of numbers be recaptured?
Hi, Paul. Heidi. Good morning. Yeah, definitely. This is a huge news, not just for Nvidia and also for AMD, potentially other chip makers, right? In April, there's a new informal letter from BIS that restricted H20 from Nvidia and other chips that have similar capabilities in terms of memory bandwidth and networking speed. This is huge for Nvidia because now they can re-enter Chinese market with their H20 chips and also the upcoming B30 or RTX 6000D chips. They go into China, and this is significant upsides. Here in Futurum, we model together between B30 and also H20 that could bring potentially additional 7 to 8 billion revenue a quarter for Nvidia, and this is huge.
Well, if history's shown us anything, it's that the Trump White House can be somewhat mercurial in terms of its decision-making. How much confidence can Nvidia have, and AMD, that this reversal is going to be permanent, that it won't be reversed again?
Yeah, I see this policy shift as relatively permanent in a way that this is, number one, this is part of a negotiation with US and China. And I see there's a policy alignment between Nvidia and also the current Trump administration. Because remember, back into April, there's a contentious and tension between the administration and Nvidia because they couldn't really figure out the controversy around H20. But right now, after the policy shift, I see more policy alignment between Nvidia, the Trump administration, and also other AI chip makers.
Right, you're seeing on our screens at the moment the top 3%, Nvidia making up 3% of total global market cap. How much bigger can this company get given the presumed resumption of business in this key market?
Yeah, I think there's a still significant upside, right? Right now, we'll talk about let's say in Q3 and Q4, right? We'll talk about additional 7 to 8 billion revenue coming out from China. And, throughout the rest of the 2025, we'll talk about 15 to 20 billion in the second half this year. And moving forward in 2026, I believe there's still strong AI demand in terms of AI training, AI inference coming out from China because we are seeing significant and rapidly developments in Chinese AI landscape.
Another way of looking at it is just how big Nvidia is when it comes to some very, very big countries. This chart showing that Nvidia is larger than Canada. If it adds another $1 trillion in market cap, it would be contending with the size of India as well. Paul sort of talked about some of the, policy uncertainties from the Trump administration. We know that, that is a tendency for this administration. But how much of this is really a watershed moment for Chinese policymakers? Does the sort of argument that the White House is making in terms of the advantages to the US make sense to you?
I think it actually makes sense because this really complicates two things. Number one, when you have more Nvidia chips right now going back to China, it's actually marginalized a lot of Chinese domestic chip makers, including Huawei, Cambricom, Hygen, Infront, all those domestic AI chip makers, right? That really marginalize their potential market in China, right? From the Beijing's perspective, this will make the self-sufficiency push in AI chips even harder because right now there will be still significant reliance on Nvidia and AMD's solution in terms of AI hardware.
How long is that situation going to endure, though? Because while those curbs were in place, we saw China becoming very creative and not just finding ways to circumvent them, but also nurturing its own homegrown version of this. Are there any equivalents or better than the H20 chip, either in production or in development in China?
Well, I think in terms of H20, given the memory bandwidth importance for AI inference, I think for now, there's not much solutions running in China that is comparable to NVIDIA. But this reflects to NVIDIA's sort of medium and long-term concern, right? Because essentially, they can only sell chips that under the new ASPO control threshold, right? So in the long term, I do think there's a concern that there will be other competitors against NVIDIA. But I think for now in China, NVIDIA still will maintain its technological and market leadership.
Is this a game changer for some of the homegrown AI, then, the likes of DeepSeek?
Yeah, I think this is definitely the one for number one, that give them more compute, right? But this is the chips that is at least one generation behind Blackwell, right? And if you look at their computational performance and memory bandwidth, it's really not comparable to the current chips that most of the US companies are using. And I think another thing is this really complicates a lot of domestic Chinese chip makers because essentially they want to fulfill the market share they left by NVIDIA. But right now, NVIDIA coming back to the market, I think that makes things a lot more difficult.
Ray, really great to have you with us. Ray Wang, Research Director for Semiconductor Supply Chain and Emerging Tech at the Futrim Group.
Thanks for listening to today's episode of the Bloomberg Daybreak Asia Edition podcast. Each weekday, we look at the stories shaping markets, finance, and geopolitics in the Asia Pacific. You can find us on Apple, Spotify, the Bloomberg Podcast YouTube channel, or anywhere else you listen. Join us again tomorrow for insight on the market moves from Hong Kong to Singapore and Australia. I'm Doug Krisner, and this is Bloomberg.